Hello, I'm Joe Testa, Investing in Democracy. In my book, Investment Dilemma, I write, everything starts and ends with philosophy. There is philosophy and the power it creates. Investment is all about philosophy. Philosophy creates investment, and everything we do is an investment. Again, that's from my book, Investment Dilemma, which is available on Amazon. Democracy is the greatest way to achieve investment success for both the individual and for society. The problem is that democracy is not a natural state. It is not static. It is a very volatile and vulnerable philosophy, as history shows. It is ultimately a moral negotiation between citizens and their current government. It is always moving, either increasing or decreasing in practice. Keep in mind that a trend can be imperceptible at first and then manifest quickly. Investing in democracy is paramount. Artificial intelligence, interest rates, valuation measures, alpha, etc., are all important. However, altogether, they are not as important as a democracy. Investing is created by democracy, not the other way around. Investing grows or declines following the direction of democracy. A growing democracy has characteristics. An increase in accurate disclosure and transparency by government and business. An increase in political and economic participation of all citizens, particularly the middle class. An increase in free speech, freedom of the press, and open media. A strong, stable currency, particularly if it's backed up by gold. A consensus on taxation. A judicial process focused on justice and civil rights. An increase in social stability. Less surprise events, particularly less negative ones. And a decrease in the information gap between a society's words and reality. Now, there are investment implications. A growing democracy is a very positive financial ecosystem. The increasing disclosure and transparency presents increased knowledge, thereby making risk more easily understood and managed. Numerous investment opportunities in various asset classes will become widely available. Long-term planning becomes clearer. Strong and stable currency offers more opportunities, both domestic and foreign, and the social stability reduces strife, allowing more collaboration and partnerships. Consensus with taxation leads to increased efficiency in government. A fading democracy has characteristics. A decrease in disclosure and transparency, less accuracy. A decrease in free speech and freedom of the press, and even a tax on both of those. An increase in the proliferation of propaganda as an information source. A decrease in the political and economic participation of citizens. There will be a prominent use of fiat currency, dissension on taxation. The judicial process will focus on government and business. There will be a rising information gap between society's words and reality, and an increase in surprise events, mostly those that will be negative. There are investment implications. A fading democracy is a dangerous financial ecosystem. Information becomes more obscure and manipulated. As disclosure and transparency decline, the assessment of risk is much more difficult. You need to have a careful selection of asset classes, as many will lose value. Bonds become more risky. Equities become more volatile within a declining trend in prices. Funds and annuity become riskier. And due to the political nature of real estate, it will be more vulnerable as an investment. Currency will be used for fiscal manipulation. Taxation is contested, making planning difficult. Long-term planning is ineffective, even dangerous, particularly if it's based on history. There is an increase in social strife, and that will affect the nature of the philosophy of a society. There can be a rotation between deflation and inflation, with inflation more likely the longer-term prospect. Trends will be fleeting, hope disappointing. You need to prioritize investing with flexibility and liquidity, taking advantage of short-term opportunities within a longer-term objective that recognizes the changes in society. Some may eventually find success moving assets to another society. For several decades, there has been a steady flow of this activity, along with Americans giving up their citizenship. If this is considered, you need to be aware of what is called an exit tax. Now, America is in a state of flux, and it may be hard to determine the long-term trend for democracy. We are a resilient society, but there are plenty of ominous signs. These signs are very important and need to be monitored constantly. Once a democracy is in decline, it can be very hard to revitalize. There will be forces against it. Remaining investment opportunities will be moved away from the middle class and taken by an oligarchy. Capital controls will take the place of democracy. So to protect your family, you will need to correctly ascertain the extent and speed of any movement in democracy and adjust your investments accordingly. Be aware that the investment markets currently appear to be high risk and could be subject to dramatic volatility. Whether that is part of a decline in democracy is hard to tell presently. I will try to help you in any case. For disclosure purposes, my portfolios for the past 2 years have been heavily invested in cash and gold-related stocks. No long-term bonds, and I have a select collection of equities. For more information related to this, you can read my book, Investment Dilemma, which is available on Amazon. And you can read my blog, Reason at Risk, www.reasonatrisk.com. And you can look for my other videos here on YouTube, Testa Talks. Thank you. Until next time, I'm Joe Testa.